Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it's the last trading day of this holiday truncated week. And after 3 days of consecutive rally, the GIFT Nifty is indicating a muted start for our own markets. Even the pre-opened rates are looking for a subdued start. Pre-opened rates, we can see Sensex is down about 100 points and Nifty is also floating flat in the red at this point of time. But we have the Nifty weekly option expiry today, so the price swings cannot be ruled out in today's trading session. Also, since not just India, US will also be entering into the long holiday weekend, so thin volumes are expected in today's trading session. But to start off with, the global handover, that came in quite mixed because overnight we saw that the US markets have seen quite a sharp sell-off overnight after Fed Chair Jerome Powell said that the tariff tensions could drive up the inflation and he needs to observe the inflation trends to decide the next course of policy action. Now, this picture was quite reverse in Asia-Pacific markets because Asian markets seemed to ignore the Powell comments and there were smart gains seen in Hang Seng, Japan, Korea and even China. Yesterday, even US President Donald Trump said that there was a big progress to negotiate directly with the Japanese delegation. So the hope of progressive trade deals is what the Asian markets are hoping for, and we can see the cheer which is visible there. But beyond the global news, earnings action will continue to remain in focus. Wipro yesterday did report a weak set of numbers and they guided for an even weaker top line for the first quarter of FY26. So we'll watch out for that stock. We'll watch out for the overall IT sector too. Infosys is also going to be in focus because they will be reporting their Q4 results today. We'll take up more stocks in focus. So keep posting your stock related queries and we'll take them up shortly. But moving on, let's quickly take a look at the top headlines this hour. Wall Street ends sharply lower after Fed Chair Jerome Powell warns that tariffs could pose a challenge between controlling inflation and boosting growth. Nasdaq tumbles 3%, the Dow drops nearly 700 points, Treasury yields fall to a one-week low. Stocks in the Asia-Pacific trade mixed as investors assessed quarterly earnings and tariff worries continue to weigh on investor sentiment. The GIFT Nifty is indicating a gap-down start for our own markets. Oil prices extend gains on the prospect of tighter supply after US imposes further sanctions to curb Iranian oil trade, and as some OPEC producers pledge further output cuts, gold zooms past $3,300 an ounce as investors seek shelter from tariff war. Wipro misses estimates in Q4, revenue declines nearly 1% on a constant currency basis. Growth outlook remains weak as the company expects revenue to drop as much as 3.5% in the next quarter as well. In key earnings to track, Infosys will be reporting numbers later today. Money Control poll estimates dollar revenue to decline between 0.5% to 2.3% quarter on quarter. Investors will be keeping an eye on the guidance for Q1 too. Also watch out for HDFC AMC numbers. Alright, in yesterday's trading session, we saw both the Sensex and Nifty clocking the third straight day of gains. Nifty rose above that 23,400 levels, which is hovering at 2-week high. Some of the top Nifty contributors, they included the financial names, HDFC Bank, Axis Bank, all of them contributed to Nifty's gains. Even the PSU bank lenders, be it the likes of SBI, Bank of India, Bank of Baroda, they also gained in tandem. Apart from that, media stocks were also one of the top gainers. However, pharma stocks, they were on the losing end and they ended in the red. Today, however, we'll be looking out for some of the Q4 results, which is your Infosys, Jio Financial and HDFC Life will be reporting their Q4 results later in the trade today. But three main cues that will set up the tone of the trade today, which is first is your option cues data, where the Nifty put call ratio has risen to about 0.98 levels from 0.93. So some kind of bullish sentiment which is prevailing in the markets. On the F&O ban list, Irida stock that has been added on the F&O ban. Yesterday we saw quite a sharp surge in Irida stock after the Q4 results impressed the investors and the cheer was visible. The stocks that have been retained in the F&O ban that includes the likes of Birla Soft, Hindustan Copper, Manappuram Finance and Nalco. On the other hand, on the third is the fund flows data, where the FIIs continue to remain the net buyers. They've bought stocks for 2 consecutive sessions, and in the last session they bought around 3,900 crore rupees in the cash markets. However, DIIs, we can see some of the lightening of the positions. They have sold stocks which was worth about 2,500 crore rupees in the cash markets. So yes, all in all, a positive sentiment, but whether or not we can hold on to this, that we need to watch out. But joining me is Ajit Mishra of Religare Broking. Ajit, good morning. Nifty did reclaim 23,400 levels. Can we expect 23,500 given that FIs have remained net buyers for the last 2 sessions?
Yeah, good morning, Lovisha. So, Lovisha, the last 1 month is no less than a roller coaster ride for the markets. Means we started at the area 23,800. We slipped lower. We breached March month lows. We made a new low around 21,700 zone. And then again, we are inching towards the upper band of this consolidation range. So as of now, more than any level, I believe that sustainability, if we manage to hold the major averages, means in the yesterday's trade, Nifty could manage to reclaim the long-term averages once again, which is placed around 23,400 mark, where both medium-term and long-term average 100 and 200 days of exponential moving averages are placed. If we hold this level, then probably we can see index impact inching towards 23,800, 850 area, the previous swing high, in the very near future. And banking is the key catalyst. Today we'll see that Infosys is going to declare the numbers, and on 19th we have HDFC and ICICI numbers are also scheduled. So next we are going to see market reacting to all 3 heavyweights number on Monday session. So that would be critical to see. Today, I believe that there could be a bit of a consolidation in the market, but as long as we are holding above this 23,000 mark now, one should continue with buy on dips approach with focus on banking, financials, basically the sectors or themes which are outperforming consistently.
Okay. Some of the banking names will be reporting numbers over the weekend, like you said, Ajit, ICICI Bank and HDFC Bank. How do they look on the charts over the PSU lenders like SBI or Bank of Baroda for the likes?
Exactly. So, banking index, we are just away around, 1% from the record highs level. So, and largely the contribution is from the top 3 names, 4 names rather, HDFC, ICICI, Axis, and selectively from the others, like as of late we've seen some recovery in IndusInd Bank as well. I missed Kotak obviously. So Kotak was also the key contributor during this rally. Now we are seeing the PSU pack in the last trading session. We were seeing decent traction across the board. And though SBI is still sitting on the sidelines, but stock like Bank of Baroda, Canara Bank, Bank of India, Indian Bank, they are definitely witnessing decent traction. There could be some catch-up move in the PSU bank in the near future. So tone looks positive for private banking majors as well as the PSU pack. Since we are already trading at the record highs for both ICICI and HDFC, there could be some consolidation. In case if there will be any sign of any intermediate challenge related to NIMs and other factors, but otherwise the tone looks positive, and one should continue with buy on dips in both HDFC and ICICI.
Okay, Ajit, what about the pharma index? There is a little bit of a tariff overhang which is prevailing on the sector, and yesterday it was one of, it did not perform well also. So do you believe that investors should remain on the sidelines until the tariff volatility is out of the way?
Yes, I guess, Lovisha, there's no point looking for something which is not very clear, or we have some ambiguity regarding the near future. IT also I would recommend considering that though we have seen a decent correction and we may see some technical rebound, But considering that the global volatility is still high, it's prudent that one should avoid both pharma and IT for the short-term trades.
Okay, all right. Let's quickly take a look at the first rates, which is trickling in. We have opened in the red at this point of time, flat in the red. That is your 0.2% cut. Below that, 23,400 levels for the Nifty 50. Sensex is also opened in the red. 100 points downtick for Sensex. 0.1% cut, which is coming in for the Sensex front. Let's take a look at how the broader end of the markets are performing. Small cap and mid cap indices both have opened in flat in the red. So very muted start for the markets, given that we did see some weakness on the Wall Street. However, Asian markets were holding on to the gains. So we'll watch out if we do defy and we see a little bit of a green later in the session today also. But some of the sectoral gainers and losers at this point of time, Nifty Auto Index seeing a cut of about 0.4% yesterday also. Nifty Auto Index was one of the sectoral underperformers, and today also it's extending its sell-off to about 0.4% cut. Nifty IT Index, one of the top sectoral underperformers, definitely the weakness persists from the Wipro's cautious guidance also. We can see about nearly 2% cut coming in for the Nifty IT Index. Other than that, Nifty Realty Index flat in the red at this point of time. Nifty Metal Index with about 0.5% cut coming in there. However, what is doing well on the markets, that is your Nifty Pharma Index. After yesterday's downtick, we're seeing a bit of a recovery, 0.4% gains that is coming in. PSU banks continue to do well, and private banks are also doing well at this point of time. Nifty FMCG Index, on the other hand, it's seeing a cut of about 0.2%. Let's take a look at some of the top gainers and losers on the Nifty 50. Top gainers continue to be ICICI Bank ahead of its Q4 results, which is due on Saturday, with about a percent gain at this point of time. Dr. Reddy's Lab seeing more than 0.5% gains. Adani Ports, Apollo Hospital seeing a gain of about 0.4-0.5%. Cipla also doing well. So pharma stocks are defensives are taking a upper hand at this point of time. FMCG and pharma stocks are doing well in this volatile market. On the other hand, if you look at some of the top losers on the Nifty 50, that includes the IT stocks are dominating some of the losers pack. Wipro definitely after its Q4 results, which was below this what the street was estimating, 5% cut, a very sharp cut we are seeing on Wipro. Other than that, Infosys or TCS also bearing a cut of about 1.5 to 1.6%. Tech Mahindra seeing a cut of about 1.4%. Tata Steel, other than that, we can see Tata Steel and Hero MotoCorp with about 1.6 to 2%. But yes, Wipro, one of the top losers on the Nifty 50, the company did see the net profit rising to about 26% year on year. However, revenue, that rose very modestly by about 1.3%. What the investors are being cautious about is that your management did indicate a degrowth in top line for Q1 FY26 due to tariff moves and uncertain demand scenario, and they expect certain discretionary cuts which is going to delay some of the decision making in deals. Ajit, after TCS slowdown in Q4, Wipro is also indicating a cautious outlook. Like you mentioned that it is time to stay away from them. What are you seeing on Wipro as well as Infosys, which is coming out with its Q4 results later today?
Right. So, in fact, if you see the IT index, we have seen decent correction, and of late we were seeing some sign of consolidation also. So, I might not say outrightly that we are bearish on IT as of now, considering that we have already seen a very sharp cut, means from 45,600 levels to 31,000 zone in the IT index. So probably we are likely to consolidate in this range. So this sector is likely to underperform, from the short-term point of view. And Wipro also, like, we are retesting the previous swing low close to around this 230 to 25 area. So probably this range should play out, means 225 to 240, 45 in the near future. That's the reason why, because if any sector or stocks is outperforming outrightly and we have a clear directional view, so it's prudent to avoid such names. And Infosys also, like, trading in a similar lines, means after this rebound again we are seeing a bit of a profit taking at the higher end around 1450 mark. So broadly 1300 to 1450 is something that the stock might hover at least in the near future.
All right. Let's take another stock in focus, which was your Ultratech Cement. The counter is down in today's trading session, but the company did announce that it will acquire about 26% equity stake in Ampin CNI Power 8. Now, the deal is valued up to 25 crore rupees and it is aimed at enhancing Ultratech's renewable energy capabilities and meeting its green energy requirements. Ajit, if you look at Ultratech Cement and of course the entire cement pack that is quite buzzing in trade, even today Nuvama has come out with a report saying that the outlook is improving for the entire cement sector given that the prices are expected to rise ahead. What is your view on the counter for Ultratech and of course the entire cement space?
So that's true, Lovisha, because earlier we were seeing that the sector was witnessing pressure due to multiple reasons because the industry consolidation was going on and the price-wise also we were not seeing any major improvement. Of late, we have started seeing this trend unfolding and Ultratech among the leader, we have seen a sharp recovery from the 10,000 to now we are closer to the record highs zone. So yes, this is among the top performing names, and as of now, Ultratech and Ramco, these are two names where we have seen sharp recovery. So definitely one can continue to hold the longs. 11,000, 11,200 is a zone basically where we have multiple supports in Ultratech. And let's say once we cross this barrier of 12,000, 14,000, 14,500 something that the stock might test. So definitely one can look to accumulate at current levels with 11,000 being the closing stop loss.
Okay, all right. Let's move on to another store and let's take some of the viewer queries that is trickling in on our live feed. The first query coming in from Shweta Naidu. She's asking the views on Anant Raj and whether it is a good buy right now. Ajit, after some deep-seek fears which was prevailing on the stock, the counter has been seeing a sharp knock from around 800 levels to around 450 odd levels at this point of time. What is your view on the counter? Is it a favorable buy?
So we have had almost phenomenal run in the recent years, and usually when we see correction in the market, even the top performer corrects 50-60% on an average, and that is what we have seen in Anant Raj also. So after making a high around 900, the previous multi-year high was close to around this 350-400 area. We've tested that mark and now we are seeing some sign of stability. But still, it's a high beta counter. So if you are okay with 5-10% kind of a move in a week or less than that, definitely you can look to accumulate the stock. 400 now on the closing base should be a stop loss. 550, 560 is what I'm eyeing as a first immediate target where long-term averages are placed.
Okay, all right. Let's move on to another viewer query. The Naveen is asking the views on ICICI Prudential Life. Ajit, from the past 5 days, the stock has been regaining momentum and now the Q4 results were also quite good. What do you expect for the stock to go from here on?
Right, so we are seeing some sign of reversal, early sign of reversal in ICICI Pru, means the price action combined with volume indicating multiple attempts. But we have hurdled around this area 605, 620 where the major moving averages are placed. So as of now, it might consolidate in the near future. But if the view is, let's say, for 3 to 6 months, one can look to accumulate the stock now with 540 as a closing stop loss and 620 as the first target area. And once we break that barrier, then 660, 670 is also possible.
Okay, all right. Let's move on to another viewer query. Shweta Naidu is asking that she's bought PG Electroplast at about 840 rupees per share. Whether should she book profits or hold on to the stock? PG Electroplast, Ajit, it's trading at about 965 odd levels. So she's seeing quite a good profit at this point of time. What do you suggest?
And in fact, if you'll see, Lovisha, this stock didn't do much during this volatile phase. Means it's strongly holding around its record highs while maintaining above its major averages. So this clearly indicates that bulls are completely under control and they might make an attempt of newer highs in days to come. So I don't see any reason of booking profit in this stock wherein we are seeing relatively high strength. In fact, with a trailing stop at 820, one should continue with the long positions. Once we break this previous swing high around 1050, 1200, 1250 is something that the stock might test.
Okay, all right. right, 1250, that is what we need to watch out for. But let's move on to another viewer query. That is your Paddy is asking the view on IndusInd Bank now the dust has settled. IndusInd Bank, any views on the counter, Ajit? Yesterday we did see the news report where they estimate the discrepancies to be lower than what the internal review was expecting.
Right, so that's the reason why we have seen decent recovery in the last couple of days, and now we are very close to that zone where we had a very sharp cut, means a gap down start. So maybe close to around 814, 815 will be the area where we have multiple resistance. Once we penetrate that zone, then probably we can see a decisive recovery towards 880 area. So as of now, fresh buying I would recommend to avoid, because then we have HDFC, ICICI, which are trading at the record highs, is something that one should prefer, or Indian Bank or Federal Bank from the banking space.
Okay, all right. Let's look at another viewer query. That is your Bhumika is asking the views on Dr. Reddy's lab. Is it a good time to buy? We were discussing about pharma stocks in general, Ajit, also, but what is your individual view on Dr. Reddy's?
So this stock definitely looks comparatively stronger. If you see from the record highs of around 1400, now we are currently quoting at 1160. So it's not a much decline, and this clearly shows outperformance within the sector. And probably once we see this, tariff challenges settle down, it might outperform, going ahead as well. So if let's say your view is long term, definitely you should stay put. There is no reason to take any call as of now. But yes, if the view is short term, probably it can consolidate further. Means 1250 is the upper band and 1100 is the lower band. So closer to the upper band, you should book profit and sit on sidelines, wait for a decisive breakout.
All right, wait for the decisive breakout in Dr. Reddy's. Let's move on to another viewer query. Ratna Kumar is asking that he is holding 100 shares of TCS, and in this current scenario, should he hold or exit, because he's seeing small profits, and he is asking what the future trajectory is going to be. What is your suggestion, Ajit? Should he hold on to the stock or should he book profits?
So see, if the view is short term, definitely I would recommend to book profit, because again, the relative strength is lower in IT sector, and we might see some consolidation. Means the stock might continue to underperform in the near future, considering what we are seeing. Means banking, financials, and other sectors are taking from the front. So yes, you should book profit and shift to any private banks or the other banking names which we just mentioned.
Okay, all right. Let's move on to another viewer query. That is your Satvika is asking the view on HCC, Hindustan Construction Company. If you look at from the past 1 month, this stock has seen quite a good reversal. Ajit, what is your recommendation on the stock?
So yes, we are seeing some stability now after this correction from 50 to 22 area, and the stock has reclaimed the short-term averages, which is a good sign. But for any further momentum, we need to reclaim this area around 28, 50, 29, and then we can inch toward, let's say, 32, 34 area. So as of now, yes, you can stay put, but aggressive position is something that one should avoid. 24 should be a stop loss with 32 as a position target.
All right, let's move on to another viewer query. That is your Satya is asking the views on IDFC First Bank. IDFC First Bank, Ajit, if you look at from March lows, the stock is seeing a good recovery of about 16% or so. What is your suggestion on the counter? Is it a good buy at this point?
So yes, recovery is there, but we all know, Lovisha, that the kind of underperformance stock had been struggling for last several years. So again, recovery is one part, outperformance is the other part, and in this kind of market scenario where we are getting opportunities to invest in the top performing name, there's no point looking for stocks like IDFC First Bank, Bandhan, RBL, which are seeing rebound every now and then, but they lack sustainability. So as of now, my recommendation is still that to stick with the top names or the second rankers and avoid the other names.
All right, stick to the top rankers at this point of time. Let's move on to another viewer query. That is your Shweta is asking the views on Macrotech developers. Macrotech developers, past 1 month, the stock is doing quite well. And of course, Nifty Realty as a whole sector, Ajit, is doing quite well, given that RBI has gone ahead with the 25 basis points rate cut. But on the individual counter for Macrotech, what is your suggestion?
So in fact, it's outperforming within the sector, Lavisha, because if you see the kind of decline that most of the other realty counters experienced in the last 4 5 months, it's been concerned comfortably holding above this 1050 1100 mark, despite all this challenges. And now we are seeing gradual recovery after this base formation. So probably around 1500 1550 is something that the stock might test in the near future. So definitely you can stay put, you can buy fresh. 1180 on the closing base should be a stop loss.
Okay, all right. 1150 is where the stop loss should be. The next viewer query that is coming in from Bhumika is the view on IRCTC. IRCTC, what is your thoughts, given that railway counters are also have always been in focus, Ajit, but what is your view on IRCTC?
Right. So, see, we are seeing some bit of recovery in railway-related stocks also, but the quantum is less, and we are seeing a similar story in IRCTC. The stock has rebounded after testing its monthly support area around 650 levels, but the pace of rise is very gradual. Plus, the volumes are not very conducive. So, we might see this gradual up move continue with strong hurdle at 800. While 720 is the immediate support. So again, if you are already invested, then definitely you can stay put with 720 as a stop loss. Otherwise, look for stocks wherein we are seeing greater traction with alignment with the index.
Okay, all right. Let's move on to another viewer query. That is, your Shivakumar is asking, can I buy Titan company at these levels? Titan, Ajit, it did come out with its strong Q4 business update. All three segments, eye care, watches, jewelry, all of them posted strong gains. What is your suggestion on the counter?
Right. So yes, if somebody is looking for fresh investment or accumulation at current levels with, let's say, 3 to 6 months of time horizon, it's a good zone to look at. Because if you'll see that it's almost nearly 2 years now that the stock has been hovering in this band. Currently, we are in the middle of that range, and once we, let's say, break this barrier of 3300 mark, then 3650, 3700 something that stock might test. So yes, you can continue to accumulate in this range of 3100 to 3200, and wait for the positional target of 3650 to 3750 in next 3 to 6 months.
All right, next 3 to 6 months. Let's move on to another view. Okay, Shivakumar is also asking, what is the outlook on M&M compared to Maruti Suzuki? What is your view on the counter on the overall auto sector space also, Ajit? Because Q4 is something that everyone was eyeing out on festive launches too. So what is your overall take?
True. So, Lavisha, in this space also, if you see that stock like Aisha, TVS, M&M, they are among the top performers. Means they are consolidating in a range while others are struggling. And now at least we are seeing some sign of recovery in the two-wheeler space. Bajaj Auto, Hero Motoco, which were continuously witnessing selling pressure. So if I'll compare it with Maruti, let's say if the view is very short term, then probably we can see a similar tone, means both are likely to consolidate. So for Maruti, 12,000, 12,200 is the area where we have multiple resistances. Downside around 11,000, 10,800 is the zone where basically where we have the support. So around the lower band, if you buy and look to book profit around 12,000 area, it's a good strategy. Same hold true for M&M. Let's say if we see any dip towards 2470, 2450 area, and use any recovery towards 2750, 2800 zone to book profit. So it's likely to hover in this band at least in the near future.
Okay, all right. Just one last question before we let you go, Ajit. What are your top picks at this hour? We are seeing a bit of volatility, but the tariff news, that can be, the 90-day pause in tariff is giving a bit of relief to the markets.
That's true, and in fact, Lovisha, because we have long weekend and market's going to react to the big numbers on Monday. Stick with the consistent name, means they didn't participate much on the downside during this entire decline. One such name is Bharti Airtel. Almost 1.5 year of consolidation has ended. The stock is trading at the record highs. Volume are decent. So here we see a potential of next leg of up move towards 1920 to 2000 area. So with stop at 1760, Bharti Airtel is one stock which one can look to go long current levels. Then from the banking space, Federal Bank, which is currently quoting at 194. So after retracing from its record highs, the stock reversed in the last month, and we are seeing fresh buying pivot formation around the current area. So with stop at 185, one can accumulate Federal Bank also at current levels with 210 as a target.
All right, Bharti Airtel and Federal Bank. Okay, those two stocks we need to watch out for. But with that, we have to let you go, Ajit. Thank you so much for your time. Hope that we connect with you soon.
Thank you.
All right, let's take a quick check of the markets at this point of time. Sensex is still down. It's extended the downturn. Sensex is down about 300 points at this point of time. Nifty is also below that 23,350 levels. So we have extended the sell-off at this point of time. Majority of the sectors have flipped into the negative territory, barring your Bank Nifty index and the Nifty Pharma index, which is eking out very slim gains at this point of time. Other than that, Nifty IT index with about 2.4% cut, given Wipro's cautious outlook, is weighing on the investor sentiment. Mid caps and small caps, they continue to be underperformers at this point of time. However, they're flat in the red at this point of time. So compared to what the benchmarks are doing, they are comparatively faring better. But with that, let's move on to our next guest of the show. We have Gaurang Shah of Geojit Financial Services joining us. Gaurang, what do you think about this risk-on rally that we saw in the last 10 days? Do you believe that it is real, or do you expect it to sustain, or ultimately even that is going to melt up like today we are seeing?
Good morning, and thank you so much for having me on the show. So my sense is that there is a reprieve in form of 90-day relaxation that the Trump administration has announced, but we are still not out of the woods. He's also made a statement on tariffs on pharma and semiconductor, and a lot of uncertainty in terms of what is going to come out next from the Trump administration. In the 90-day window that has been given, a lot of countries and representatives of the countries are going to have a dialogue with the Trump administration. Yesterday afternoon, we heard about China's willingness to have a dialogue with US administration, Trump administration, with respect to tariff, provided respect and sanity of the terms and conditions are met with. So I think a lot of developments is going to happen in the next maybe about a month or so in form of bilateral trade agreements and foreign trade agreements, that is BTA and FTAs. India is also working. There are panels being formed, committee being formed. Discussions are already going on between India and US, how to have a common path in terms of growth and minimize the impact of tariff that is supposed to be levied and that has been already levied. So we will possibly be trading in a range as of now, but as and when we get clarity from US and a more stability in the world markets, I think we would possibly be the first ones to recover from whatever has happened in the last couple of weeks. And my sense is focusing on domestic consumption growth stories and sectors in this point of uncertain time would be more prudent. But yes, if you have an elevated risk appetite, I think IT, autos, and related sectors which are under fire because of the tariffs could be selectively looked at. Don't put all your money at one time, but phase out your investment from a long-term point of view.
Okay, Gaurang. Like you were talking about the IT sector also, we are seeing a bit of a mixed commentary there. TCS is saying that FY26 could be better than what the financial year FY25 was. On the other hand, Wipro is guiding off for a weak outlook for the first quarter of the next financial year. So what are you expecting on the IT sector? I mean, do you believe that the worst of the tariff volatility has been already priced in?
Well, I would not say that, because I think the impact of tariff on US also is going to be hugely negative. What we've been given to understand and what we've read. One thing is very clear, that there is no tariff on the IT sector, but whatever is happening in form of tariff in the US could lead to slowdown, recession, discretionary spend cut, budget spend cut. That would lead to maybe billing cycles and orders coming into the IT sector at a very slow pace, which will translate into some kind of degrowth in the earnings. A little bit premature to take a call on the slowdown and budgetary and discretionary cuts for the IT sector from US into Indian IT companies. But as a brokerage house, we at Geojit Investments Limited remain positive on Infosys, TCS, HCL Tech Mahindra. Wipro is a sell side call because our targets are in place. I think it would be interesting to see how the first quarter pans out this new fiscal in terms of IT sector. As of now, the impact could be minimal, but would be interesting to see how the first quarter pans out.
Okay. Gaurang, even Powell has indicated that the tariff impact could be visible on inflation, and he's a bit dicey on what the policy trajectory is going to be for the next few months. But what do you see for India perspective? Do you remain it to be completely insulated, unscathed at this point of time, or do you expect the macros to be a little impacted? We are seeing a bit of cool-off inflation right now, but what is the next that you're eyeing out for?
So it won't be completely insulated. We as an economy and as a capital market, I think we are part of the world. We'll have to react to what happens in the rest of the world. But in terms of impact, I think it's going to be bare minimum. Look, we have a situation. I mean, according to us, India is in a little bit of a sweet spot. How is it? We have a decent GDP growth rate. We have inflation well within the control. The latest number that we saw a couple of days back. After 5 years of pause, we've seen 2 rate cuts with inflation where it is and going down, being benign. We could expect 2 more rate cuts in calendar year up to December 2025. And of course, the policies that have been put in place and the changes that have been made in budget in terms of tax slabs up to 12.75 lakhs, one doesn't have to pay any tax. I think that will push consumption in the third quarter of this new financial year. And that should be a significant impact in terms of contribution to the GDP also. Over and above that, we have had Met Department yesterday announcing to be above normal monsoon this calendar year. So that is again a positive. And my sense is that as we come out of this, slowdown and tariff, we could be in a much better shape. So we will not be completely, insulated, but we may have the bare minimum impact on the tariff front. And of course, growth looks quite strong.
Okay, then Gaurang, since you're talking about the consumption plays, plenty of brokerages have also been recommending on QSR stocks that they are next to see the outperformance after last quarters have been quite sluggish. Would you concur with this view, or what is your overall take?
So about 35% population is young, below the age of 30, closer to 28 and below 28. QSR segment has been on our radar for a pretty long time. One of the companies which are one of the first beginners of the QSR segment was Jubilant Foodworks. We remain positive over there. We are also positive on quick commerce. Zomato is one of the names that we've been positive right from the IPO time, and we still remain positive. And our sense is that if as the spending capacities goes up, I think QSR segment should do well, and they are one of the beneficiaries in terms of any kind of food inflation going up. They very swiftly and easily pass on the price hike to the end consumer like you and me, and of course the young India. So margins remain intact. Only thing is we need to focus on the triple SG, that is same store sales growth rate, and of course the expansion plan.
Okay. Any sectors in specific, we discussed about QSR in specific, but Gaurang, any other sectors that investors should watch out if they need to deploy their fresh capital for the next 12 to 14 months?
Well, I think if you want to be relatively away from what is happening around the world, then I think cement, FMCG, banking and finance, cap goods, engineering, defense, power, incidentally, happens to be one of the sectors that is very positive as far as we are concerned. We've already seen temperatures hitting 40 degrees plus in some parts of India. We expect the consumption to go up, and focus on clean and green energy is going to drive the appetite in terms of more power generation. So my sense is these sectors could be looked at.
Anything that you believe that they need to be completely on the sidelines apart from IT and auto sector, which is seeing a bit of a tariff pressure right now?
Well, I think oil and gas and metals, I think this is one place where you can possibly, for now, wait for clarity and then take a call.
Okay, all right. What do you believe about the earnings growth for this quarter and of course for the entire FY26? Do you expect, given the tariff volatility we are seeing, so have you trimmed your earnings growth expectations for India Inc.?
So my sense is we should do relatively better than what we did in third quarter. Of course, sectorally, one or two sectors, like I mentioned, oil and gas and metals could be a little bit of under the weather. But for the new financial year, my sense is that the shape and color and the shade should be much better than what we've seen in the last fiscal.
Okay. What about gold as an asset class, Gaurang? Because that is up about 25% so far this year. Do you believe that this is where investors should reside or take refuge until the tariff volatility is out of the way?
Look, after the rally that we've seen in gold, I think there would be days of profit booking, but overall, as a precious commodity, have been positive. We've been recommending gold-related companies like Muthoot and Manappuram. We are also positive on gems and jewelry like Titan Company. So we expect gold prices to move upwards in the next couple of years.
Okay, all right. With that, we have to let you go, Gaurang. But thank you so much for your time, and we hope that we connect with you soon.
Thank you. Thank you so much. Hello?
All right, let's take a quick check of the markets at this point of time. Sensex has recovered a bit of its losses at this point of time. It has trimmed its losses, but it's still flat in the red at this point of time. Off its day's low, Sensex is down about 72 points right now, and Nifty is also down about 23 below that 23,400 levels, but it is above that 23,350 odd levels that we were seeing in the open trade. Other than that, we can see some of the sectoral indices which is helping the overall markets to limit their losses. That includes the likes of your Bank Nifty index with about 0.5% gains coming in there. Nifty Pharma index with about 0.3% gains. Nifty Realty index with flat in the green at this point of time, and Nifty Media index is also lifting the sentiment. On the other hand, Nifty IT index, as we have been largely talking about, that they continue to lose 2% downtick coming in from there. Mid cap and small cap indices, small caps have been outperforming. They are flat in the green at this point of time from the broader end of the markets. On the other hand, we can see mid cap seeing a cut of about 0.1%. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30. We're closing. We will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.